Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to go over some of the earnings reports that happened this week and just early and towards the end of last week. And then we'll talk about the ones that might happen, that are definitely happening next week. But before we do that, if you're enjoying this type of content, please like the video, subscribe to the channel. And I'm going to answer a question one of you have asked me, and that is this thing, the gray bit here. Okay, so what the brother was asking is, what on earth is this gray thing that is half of your portfolio, right? So the colored part is the top 10 companies in my portfolio based on the how much money I've invested, right? The other half, which is literally half of my portfolio, 32,000 pounds, is the rest of the companies. Okay, so I own 29, 10 of them are the colored ones, and then the rest of them are the gray. I hope that answers your question, brother. So that's the first one. The second thing I want to talk about is I want to go through some of the earnings that was released this week and aired towards the end of last week. Some of them will be very brief, some of it might just go a little bit detailed. Okay, but if you're interested, one of the things that I like to do is, especially when I'm driving around, is to listen to the earnings calls of some of the companies that I own. There's loads of websites where you can go on YouTube, type your earnings call, you can go to the company's website, investor relations section, and listen to the call. The calls are really good because basically the chief financial officer, as well as basically the CEO and all of them, they will come in, they'll talk about it, they will present, then they get asked some questions, then you get some clarifications, and you get first-hand information rather than when you see something on the news is completely diluted and you get the bad. So these analysts, they want to shock you and basically you end up selling your stock. But it's really important that you go to the root of literally the source of the information, and instead of just basically listening to some random guy, right? And the other thing I want to do is also I want to show you one company that I have bought, and now I've actually spent almost £1,500 on that single company. So I will show you towards the end of the video, so stay tuned for that one. So last week a lot of companies have reported, so companies like this is next week, we'll talk about that in a bit. The companies that are reported last week are that's not the one, wait, 3M, J&J, Union Pacific, the ones that I own I'm talking about, by the way. Microsoft, Texas Instruments reported, is a company that I was interested in, still interested. Canadian Pacific is another one that reported, I'm interested. ASML, I do own it, and they have reported, and their earnings was actually quite good. Visa, absolutely brilliant. Mastercard reported as well. So there's quite a lot of companies that are reported, and also ADP, which we will talk about in a bit. Okay, so all of these companies have reported. Some of them were really good. So companies like, for example, Visa was really good, ASML was good, nothing to worry about, nothing basically. ASML, I even basically went ahead a little bit and did a bit more research, especially with China situation, and I actually liked what I heard from the company going forward, especially because they're still selling some of their products to China despite what the US have told them not to do. Okay, and going forward, I don't think they will stop selling their product, because the US basically recently blocked all the US companies to start selling their chips to equipment and chips and so on to the Chinese, because of obviously what the hell's the situation between the two countries. But yeah, ASML came out and just said we're still selling to them. I think 10% or more of their revenue comes from China. So anyway, that's a good news. So we'll talk about that in a second. But the first company I want to talk about is 3M. 3M reported, okay, in terms of the EPS, they actually just missed by 11 cents. In terms of revenue, it was actually down year on year. So that's important. So for the year, they were down. But based on what the analysts were expecting, it was actually up by $10 million, right? So this is the bit that worries me the most, because that means going forward, it basically looks like earnings are declining. We will be in the negative for the next quarter at least. Now, that is a little bit of concern, as well as if the company was doing all right in terms of their earnings and so on, I would be happy. But now two things are happening. The legal situation is still ongoing, and the revenue is kind of declined. Okay, now maybe that's a lot to do with the fact that it's cyclical. The company that basically sells products that are not necessity. Okay, maybe going forward they will get better if the economy starts better, becomes better. The microeconomy has changes and so on. But for now, I'll be honest with you, if I was not in the red by 800, over 800 pounds, this is one of the companies I will definitely sell and take that money and put it into another stock. The reason is because it's giving me a little bit of a headache with this situation with these lawsuits. So for that reason, I will be selling at some point. But for now, I might dollar cost average down, hopefully, so I can break even one day. And for now, while I wait, I'll just get paid that dividend, amazing dividend that the company has, and I'll continue to hold the company. And one of the things that basically analysts in the Morningstar website said is, after reviewing a white rated 3M's fourth quarter results and rolling our model, we reduced our fair value estimates to $133 from $134 per share. Now that's a lot. That's not a lot, sorry. But the organic sales growth fell below 48 guidance, so that is a little bit worrying. And if that continues, if the organic sales are basically declining, that for this type of company, that is a huge problem. Okay, so going forward, we'll see what happens, but that's my take on the company. I'm going to hold on to it for now until I break even. I will not be buying more unless it actually goes below 100. If it goes below $100 per share, then I'll try to reduce my overall, even in case 110, 100 or whatever, I will start buying a little bit to actually reduce my overall, my average price. The next one I just quickly want to mention is Colgate. Reported yesterday. Literally, there's not huge in here to worry about in terms of EPS. It was in line. In terms of revenue, it was actually growth in terms of 5% year on year, which is really good. It was a bit 50 million, and organic sales actually grew 8%, over 8%, 8.5%, which is really nice. So there's literally huge overreaction yesterday, and for that reason it went down, I think 4%, 5% or whatever it was, and I bought more of the company. So I'm not worried about it. I'm gonna listen to the earnings report in the next couple of days, but earnings call next couple of days. But there was nothing absolutely huge, and I was looking at different websites to see if there was any problem. I looked at their website, I looked at their presentations. It looks like the organic sales are growing. So what is the main issue here? And they grew year on year, and they were in line. So maybe the guidance might be slightly basically lower than the expectations, which is absolutely good news for me, because when that happens, the analysts over exaggerate. What I like to do is look at the microeconomy. Because of the microeconomy is not actually doing well enough, right? These analysts will say, oh, we expected the company to report this, but the company will be a bit more realistic and say, okay, no, we're not going to report that, we're going to report this. And for that reason, they basically stock goes down quite a bit, and that means I can buy more on the cheap, which is what I did yesterday. Next one is a Procter & Gamble. Procter & Gamble did exactly the same as a Colgate. EPS was actually in line, and it was basically, in terms of revenue, it was slightly down year on year. Okay, less than 1% down in terms of year on year, but it was overall a beat based on what the analysts were expecting. Guidance: the company raised its guidance for fiscal 2023 all in sales to basically a range of down 1% to align versus basically the prior fiscal year. So which is absolutely fine. For me, there was no concern from this side. Actually, they didn't go down as much as I wanted to. I would have loved it if the company was down 4 or 5%, but then it will be almost a kind of fair value. I think they're still trading higher. Let's quickly check. Let's go in here. I think it's about 13%, 14% actually up, or premium, if you like, according to there we go, 12% premium. Okay, so it's still expensive. The quarter was absolutely fine. There was no change from their valuations. 126 is still basically where it was before, but these 2 stars need to become a listed 4 or 5 for me to even look at it. Maybe 120 will be absolutely brilliant, but I don't know if it will ever go down to that price. This is amazing when it comes to this company. ASML actually came out, and in terms of EPS, it was a beat. Okay, remember they report in euros because they're a Dutch company, right? Revenue was up 28.5 year on year, which is absolutely amazing, which is about 50 million euros, right? Gross margins 51%. Quarterly net bookings was up basically, of which, oh, these are the EUV. Wow. I haven't actually looked at this in details yet, but from this side, from this website, but I looked at the presentations that they've actually had on the actual website. ASML expected 2023 net sales to grow over 25% compared to 2022, which is absolutely amazing. Slight improvement in gross margin relative to 2023. Absolutely amazing. So they expect a Q1 net sales between 6.1 billion to 6.5 billion, and a gross margin between 49% to 50%, which is absolutely amazing. They expect the research and development to cost of around 965 million, okay, which is quite huge, but for this type of company is absolutely fine. So yeah, there's nothing for me to worry about. This company actually went up on that day. I couldn't buy more of. I still own my 3 shares, I think. So I haven't actually added to it, done anything else to it yet. Regarding Microsoft, when I heard the news first, when I actually seen the headlines first, I genuinely thought there was something bad happening in the company. Yes, there's basically a little bit of a slowdown in certain sectors of their business, but this company has so many different products, you expect some of them to slow down. So for example, things like the Azure cloud slowed down basically 31%, barely beating the analyst projections. 31%. Yeah, I know not long ago it was about 40%, 50%, but that's not going to continue every single year. So overall, Microsoft's revenue was not bad at all. There was a couple of sections, things like the Windows OEM, revenue section was actually down 39%. So that kind of thing did happen, but overall, the fact that they are a huge company, they will have a slowdown in certain sectors, sectors of their business. That's absolutely inevitable, and it does happen. The final thing I want to also say is that I was listening to the CEO recently, and he was talking about GPT. If you haven't seen that interview, go and watch it. Absolutely amazing. And I like the fact that the company is diversifying like so much to the point now everything they do will be some sort of a AI driven. And I love that, because if you think about it, I do genuinely believe AI is the future, and a lot of the technologies, a lot of the things that we do right now will be replaced and basically will be done by an AI. And these things are getting intelligent. They are actually, the more data we provide, the more intelligent they become. And that's what these companies are doing. So Microsoft is a great company. I have no issues, problems with holding to the stocks that I own in my portfolio already, the shares that I own. And if it comes down, the multiples are still a little bit high. I'm up I think about 5% or so. So if it comes down a little bit, I'll probably start adding a bit more of that company. 2 more companies, and the one I just briefly want to mention is Visa. Visa just reported just a couple of days ago. I think it was day before yesterday. And yeah, absolutely fine. No issues with this company as usual. Normal business. They have actually beaten the analyst. They've beaten the street. And obviously, in terms of revenue, they grew almost to 12% a year over year and beat the analyst at about 200 million, which is absolutely beautiful to see. Finally, if you're looking at Morningstar, they still have the same fair value. So they have not changed that. They're maintaining that. Okay, and they've said net revenue increased to 12% year over year, which is quite nice to see, or 15% excluding currency impact. Okay, so again, great company, same like as MasterCard. They both reported great earnings reports, so absolutely no issues in that sense. Finally, I want to talk about EDP. That's automatic data processing. This company has actually beaten both the revenue and the EPS. So EPS was actually basically just beaten by a little bit, and revenue year over year was almost 10%, 9+% up year over year, and it was in line what was it basically expected. They maintained their full year guidance for 8 to 9% revenue growth and 15% to 17% adjusted diluted EPS growth, which is absolutely brilliant. And when you see this, you're like, okay, there's nothing alarming in this business that might indicate anything else. But obviously the microeconomy is not great at the moment, and things are coming down, and possibly that for that reason, that's one of the things that's happened to this company. Because remember, their main product is they deal a lot with the payroll side of things. So if the economy is slowing down and the companies are no longer hiring and so on, they might be slowed down in the business itself. And for that reason, I think that's why it went down. But it went down quite a bit, to the point right now, at one point it was kind of fairly valued. Right now it's 3% discount, so which is really good for me. And that's exactly what I did. Was I sold another stock that I had in my portfolio, and I bought 7+ shares of this company. So right now I own 8 shares of this company. I'm down about 4%. So when I bought it straight away, obviously it kept going down, but that's absolutely fine, because to be honest with you, I'm gonna dollar cost average. I want to buy at least another 5, basically 7 more shares to round it up to about 15 shares overall. But as you can see right now, I have £1,424 in this company, and I'm going to continue buying it going forward, inshallah. And this is honestly, this is what I love about the earnings reports, because looking at this company in terms of what they reported, there was nothing huge in there that was actually worrying. But the fact that it went down about 5%, that was a good news for investors like myself, who have been on the sideline waiting for this chance, okay? And I might even get more chances. As you can see, I'm already down, so I would dollar cost average into this business next few months. It's a great business. They have a very low debt. They have a predictable business side of things. They have actually really good dividend. They have been increasing for a very, very long time. So yeah, it's a great business, and I like to add to my portfolio and basically keep adding to it in the next few months to come, inshallah, and I'll let you know how that goes. But yeah, so this is the kind of thing that we expected from these this type of earnings reports, okay? Union Pacific was the final one I wanted to mention, but I kind of ran out of time, so I'm going to leave that out. There was nothing huge for Union Pacific either. They just missed the EPS a little bit, okay, just that, and then they grew their revenue by over 8%, but they just missed what the analysts were expecting, okay? And this is one of the companies that I actually didn't read basically the analysts or what they've said or any other websites or nothing. I went to their website and listened to the earnings call, and it was really good. Then I started reading about it, and I thought, you know what, these people are absolutely crooks. So I'm buying a bit more. I've added, I think I bought 1 more share on that day, or 2 more shares. I can't remember exactly how many, but I did buy a little bit of this company, and I'm going to continue to add in to this company in the coming weeks and months. Right, quickly, next week we are going to see a huge week in earnings, okay? So starting this Monday, you will see a lot of companies reporting, but none of the companies I own in my portfolio will be reporting. Then Tuesday, we've got UPS and a couple of other companies, Amgen, after the close. But you've got Exxon, you've got AMD, you've got GM, you've got Pfizer, Caterpillar, you've got Microsoft, McDonald's, and so on. You've got Stryker, which is another company that I'm really interested in. We'll see if actually it needs to come down at least to 50%. Corning is a great company, small, but they do all the glass stuff that goes into mobile phones and so on. A great small company. West Management is another one that's been in my watch list for a long time, okay? Thermo Fisher is another one. So you've got loads of amazing companies reporting, but the big boys are reporting. So Meta is reporting. So it'll be interesting to see if Meta reports and talks about anything in decline in terms of ad revenue, then forget about what might happen to Alphabet, Google, for example. So Merck is reporting on Thursday. You've got Estee Lauder reporting. You've got Honeywell, and Hershey's, and Qualcomm's, but the big 3, okay, Amazon, Apple, and Alphabet, those 3 reporting after the close on Thursday. That will be really interesting, followed by Qualcomm and Starbucks and so on. So it is actually after this week, after the coming week, I think the earnings report will kind of slow down. It will be smaller companies, but the next week is the big one, okay? And you might see markets being really volatile. And top of that, we're also expecting the Fed to come out to tell us what might happen in terms of interest rate. So it'll be an interesting week to see next week. Just pay attention to what's going on. Again, as always, just keep updating your watch list. Keep looking around for the companies that you own in your portfolio, the ones that you want to add to, the ones that you already own, okay? And yes, if you got a chance to buy these great companies for cheaper prices, then why not? Anyway, I'm going to stop the video right there. I hope you have a wonderful day. Assalamu Alaikum. Take care. I've got a couple of videos lined up just today, so I'll be recording a couple of more videos and then releasing it as we go along the week, inshallah. Assalamu Alaikum. Take care.